Healthy Beginnings, and we are supportive of what women do because we know they do a whole lot. And today, every Tuesday, we broadcast this podcast live. And we are so glad to our audience who are always supportive of us in all that we do. And I want to really say, shout out there to our moms who really celebrated last Sunday. Every day is a Mother's Day, if you ask me, because I know what moms do. But in a special way, we remember them last Sunday. And I want to say congratulations to all our moms. And I really admire you guys. I appreciate the sacrifice you all make to make our world a better place. And I continue to pray for God's love and protection for you and your children. And today, what we are going to do is, for me, another contribution of helping, supporting our women by looking around and looking for people who have the ability and the skills and talents that will really benefit our moms out there. I try to connect with those people and invite them to join us in our podcast. And today, one of the people that I connected with is my friend, Paul. Paul is a family man. Paul is also a colleague of mine in the healthcare. But wait till you hear how Paul just, the information that he got that changed his life. And now he is in this position to help us to build family and support them to also build wealth. Before I hand it over to Paul, I want to really read a little bit of his bio. He has a long one, but we're just going to cut it short and get straight into the business that I'm so excited about. So Onyedikachi Paul Njoku is a dual licensed insurance broker and financial educator in the state of California, as well as 38 neighboring states. He helps individuals as well as business owners by educating them on various tax-free retirement options. He also provides education on various insurance products that can be used to provide protection against income loss in the event of sickness or unforeseen life events. Paul holds one of the highest positions in his firm and has been known and awarded the Overachiever Award for his impact in the African community. That was impressive. Before his career in finance, he specialized in the care and management of stroke patients in his former career as a nurse executive. Paul's passion for financial education and literacy around leveraging various tax codes to improve individuals' protection for both their life and money are largely in part due to the huge need for this form of education within his immediate community. Paul is a husband and a father of 3 beautiful children. He resides, or he used to reside in California. Paul will tell us where he lives right now. And I am gonna actually hand it over to Paul to take us and educate us on this wonderful opportunity. Over to you, Paul.
Hello, everyone. Thank you, Sister Zita, for the kind introduction. Again, my name is Paul Njoku. Actually, I live in Dallas, Texas now. I was in California for the last almost 19 years. I recently, back in January, my wife and I, we made a decision that we're gonna relocate to Texas. So I'm in Dallas, Texas now. I'm not sure if I'm able to share my screen, if somebody can allow me to share.
Yes, you can.
It's not letting me though.
It's not?
It said host does not. It's not letting me share. but a lot of what
Emily, see if you can help with that, please.
The share button, if you could just say allow.
Yeah.
Allow to share. It will let me while I wait on that. But a lot of what we do is really education, right? A lot of what we do is education. Like I tell people all the time, oftentimes it's not the formal education that gets you to where you're trying to go. You know, imagine someone like me coming to US almost 19, 20 years ago. The mindset was go to school and get the degree. And me, that's what I did, right? So I went to nursing school, got my nursing degree. I practiced as a registered nurse in California for 10 years. Within that 10 years, I also went back and got my MBA. So I have a master's in business administration. But all along, as I was doing that, mind you, my wife is also a registered nurse. So I was a nurse, my wife was a registered nurse. But when we had our first child, right, speaking of women empowerment, speaking of that, what I quickly realized was our life changed, right? So I was a registered nurse. My schedule was from 7 p.m. to 7 a.m. in the morning. So as I'm getting home in the morning, my wife will hand me the baby on a head, and then my wife will go to work. But she was doing 8-hour shift. She was working 5 days a week. I was working 3 days a week. That was our life. But 6 months into that was when I started asking, I'm like, wait, honey, this is not the American dream that I wanted to live. How can you and I have good jobs by all accounts, but we're in a position where even to hire a nanny that can relieve us so that we can go to work, we can't even afford it. Because we were living in a state like California where everything is, So that was when I started thinking. And that thinking led me to what else out there can I do? But not just to make money, but what else out there can I do that would allow me to actually change people's life? For some reason, it's not letting me. But anyways, I could just talk. Maybe I don't need to share my PowerPoint. What else out there can I do that would really allow me to change people's life? That was what led me to what we do now, which is financial education. I am a licensed professional in almost 40 states as we speak. That license allows us to educate family on how they can save money for retirement, on how they can distinguish between how life insurance works and also how death insurance works. That will also allow us to help people with long-term cares. Most people, long-term care is not something they think about. Most people think they are young, and they will remain young and nothing will ever happen to them. Then all of a sudden, something happens, it's like, oh my God, what am I going to do? You will hear me tell people all the time that most people are one sickness away from losing everything. I have a lady right now. 2 weeks ago, she does hair. She braids hair in Sacramento, California. 2 weeks ago, I was talking to a client that she was braiding hair on, and she was the one telling the client, she like, everything that Paul is saying about living benefits, about the idea of how you could have a plan that will take care of you when you're sick, that everything that Paul was saying makes sense because 5 years ago, my husband and I, somebody came to our house in Sacramento and talked to us about living benefits. My husband, for whatever reason, didn't really do it, but I did. 2 months later, after this person talked to them, the husband was diagnosed with stomach cancer. She's like, Paul, for 1 year, my husband went from making money to not making money because he was going through chemotherapy, radiation. All of the responsibility was on her. She's like, Paul, I don't want any woman to go through what I went through. The same lady 2 weeks ago that we were talking, she's like, Paul, how can I do what you do? Because my experience, I want to make sure that a lot of people in California doesn't go through that. She's like, Paul, I want to be part of what you do. How can I get started? 2 weeks ago, the same lady, on Friday, on Monday last week, she complained of breast pain, something on her breast pain. She went to the hospital. They scheduled a biopsy. On Friday, she called me, Paul. The biopsy came back positive for cancer. 42-year-old, 4 kids. But she told me, Paul, remember what I told you 2 weeks when we met? That I had a plan, living benefits. And because she had a plan, living benefits 5 years ago, that her husband refused to get, now I'm not able to, for some reason, I'm not sure why it's not letting me share. But now, because of that living benefit, Transamerica, which is one of the companies that we work with, will be in a position to give this lady up to 90% of that $500,000, 500,000. She and I was talking. I'm like, my sister, we met by accident. We met. I was talking to someone that came to your store to braid her hair. But just know that I'm here for you. If you can't find the person that helped you set this thing up, reach out to me and I will help you go do the paperwork so that you can get ultimately what belongs to you. But where am I sharing this story? On that Friday, when this lady called me, I was taking a walk through the neighborhood. When I told her that you have living benefits and the breast cancer that you have, as you go through having surgery, going through the chemotherapy and radiation, whatever you end up doing, just know that that plan you did 5 years ago, that plan will be able to take care of you and it will be able to take care of your family. She's like, Paul, that makes me feel good, but I'm just hoping that this is it, that this cancer is not going to turn into anything. Why am I saying that? What I've come to realize is oftentimes life is going to happen. But when life happens, it's one thing to be dealing with emotional stress. It's also another thing to be dealing with financial stress. Oftentimes, what kills people when people get sick is financial stress. They don't have the resources. This lady, she's a CNA at a hospital, and then she does hair on the side. She works as a CNA at a hospital in Sacramento, and she does hair on the side. Clearly, if she didn't have something in place, she would not be in a position to go through this. So a lot of what we do is really to go out there and educate people. Because oftentimes, many people don't know how these things work. I will hear people tell me, Paul, this is over my head. My husband does everything. And then when you talk to the husband, you realize that the husband doesn't even know what he's doing either. Right? So a lot of what we do is really trying to get the middle-class Americans, the less privileged, to understand different infrastructures or different things that they can leverage to protect their family. I happen to believe that every family in America should be protected. And when I'm talking about protection, I'm not talking about things they have through their job. I'm talking about things that they could have on their own. I happen to believe it. Because an example I've just given this lady in Sacramento. I'm sure she has something with the hospital, but here's the difference. As she take a leave of absence to go through this chemotherapy, go through surgery, to take care of herself, the hospital will give her 1 year to go back to her job. After 1 year, if she doesn't go back, they will lay her off. And then the moment they lay her off, they let her go, she will lose everything that she worked so hard for. That is the part that most people are not really thinking about. Oftentimes, you will hear me talk about this. It's almost as if like people, it's like they hear it in one ear, but then on another ear it goes out because people are just not taking it serious. Or sometimes people just think nothing will happen to me. I'm young, I'm healthy, nothing is going to happen. A 42-year-old, in a matter of 2 weeks that I've gotten to know her, complained of pain that led to breast cancer. Now they are talking about doing a surgery. 3 weeks ago, nothing. 3 weeks later, this is what we're dealing with. There's a lot of that going on. I can give stories after stories after story. That's why when I met Sister Zita, she told me about this podcast. She's like, Paul, you have a message that I think we need to get out. She told me, Paul, I work with a lot of people that I care about, that they means the word to me. I want to make sure that all of them hear this message. Would you be willing to come and speak on it? I told her what I do is, yes, I would. Right? And that's why we're here today. Right? Again, apologize for not being able to show my PowerPoint because sometimes I have a lot of pictures. The picture speaks, and then I would just kind of, go along with, the point I'm trying to get across. But the point is, income protection is a real problem in this country. Meaning, I make $5,000 a month. I make $10,000 a month. What do you have in place today that says, if you get sick, where is your income going to come from? Many people don't have something in place. They don't even think about it. Replacement. How do you replace your income when you get sick? Many people don't think about it. The number 1 and 2 reasons why most people go into poverty or go broke in this society is chronic and critical illness. Some of you in the medical field can relate to this. I used to be in the medical field. Chronic and critical illness means when people get sick, they don't have a way to sustain their lifestyle. That's how many people end up in things like GoFundMe. That's how many people end up in things like losing their home to pay medical bills, because oftentimes there are no plan in place. Right? A lot of people, those are things, most people don't realize they are one sickness away. One, not two. One sickness away from losing everything. One sickness away. A lot of what we do, we want to bring awareness. We want to bring awareness to those things because these are things that they don't teach. Nobody talks about it. But then you hear people get sick. Now, or they lost the home, or they sell the home, they ended up in an apartment, or they ended up in a nursing home. Something that happened. Oh, now we're doing a GoFundMe. One of my co-workers, when I was a registered nurse in California, the dad was using the tractor. They live in the country in California. The dad was using a tractor. And somehow, he messed up his hand. They had to rush him to the hospital. They did a surgery, but after the surgery, he went into septic shock. They're doing it on Facebook, GoFundMe, they are raising money. I'm not saying there's anything wrong with those things. But I was talking to her the other day. She's like, well, the surgery, after they did it, they got infected. Now they're looking at doing amputation. They're doing amputation of the hand. The dad is a truck driver. A truck driver that was using a tractor in his farm in California messed up his hand. They did a surgery to fix it. It got infected. Now the doctors are telling them they need to cut off the hand. Dad is 50
Can you
years
share
old.
that again, please? Can you try? I think you should be able to share. We really want to see you.
Oh, there you go. There you go.
Yeah.
I think I can share now. There you go.
Okay, great.
There you go. So, excuse me. Yes. So obviously that's me and my beautiful wife. But the point I'm trying to make is this. If you look at this, the story I was talking about, my co-worker that I used to work in Sacramento, I used to work with. The dad is a truck driver. The hand got messed up. They did surgery to fix it. Went into septic shock. That means infection of the blood and also infection of the bone. The doctors are not saying that we're going to cut off the hand from below elbow. She and I was talking the other day. She like, Paul, if that doesn't work, mom is a homemaker. If that doesn't work, they're going to lose the house. Stories after stories of that. Many people think it will not happen to me. But like I tell people all the time, asset protection, income protection. Number one reason most people lose everything they built for, including their retirement, is chronic and critical illness. Right now, for my dear friend, her dad is a critical illness. But once they do the amputation of the right hand, he's going to turn into chronic. And when it turns into chronic, who's going to replace his income? He's a truck driver in California making $130,000 a year. Where is that income going to come from? Hand is going to be gone. Or we could have been in a position where this is the solution. We call it living benefits. Living benefits will be critical illness, chronic illness. That means dad, paralysis of 2 or more limbs, or in this case, it could be a chronic illness. Things like this will be able to replace his income. They wouldn't have to lose the house. Plans like this out there. He will be in a position to be able to leverage things like this, to be able to replace what he's built out, worked hard for. So again, I don't want to take us so much time. I kind of want it to be brief, straight to the point, because sometimes people might have questions. And then if there's any questions, I'm more than happy to ask. But a lot of what we do is this. We call it, like I like to call it, critical illness. Critical illness, asset protection, meaning what are you doing to protect your assets? What are you doing to protect your income? Why? Because when people get sick, chronic and critical illness, medical bills will wipe out everything you built for. Right? So you usually hear me tell people, wouldn't it make sense to shift that responsibility or that liability to someone else? We'll buy a car, we get an auto insurance. We'll buy a house, we get a mortgage insurance. Well, what's more important? You, the car, or the house? You. Then wouldn't it make sense to have something on you that will take care of you when you get sick? That's the part that most people, oftentimes people will have things that will take care of their loved ones when they die. But most people on average will probably get sick before they die. The getting sick part, that's the part that oftentimes people forget about, right? And that's where the living benefits. This is the solution to that. How can I protect me? To make sure that when something happens, I don't have to wipe out my 401k. I don't have to sell my house. I don't have to basically liquidate everything that I worked so hard for. Things like this are the solution. It's a way to mitigate that. And oftentimes our jobs doesn't offer this. I used to work for a hospital in California. I never had this, right? They don't really offer things like this. That's where you will hear me tell people, you gotta be thinking different. You gotta make sure that you protect everything that you work so hard for, right? So again, Sister Zita, I wanna be respectful of time. because I'm not sure people might have, if they will have questions for me, but I'm gonna hand it back to you and I'll stop sharing.
Thank you so much, Paul. I told you guys that when Paul starts, we can stay here till tomorrow and you won't get tired of listening to him. And being in the healthcare arena, Paul and I and his wife understand what goes on there. And I have to be honest with you guys, it is not exciting. Once it comes to healthcare, it is one of those highly competitive stuff going on. And healthcare in the United States is pretty expensive. I'm going to tell you that. I have been in it for more than 25 years. And I have worked with women and I've worked with their families, and I have really shedded tears beside beside some of my clients as they go through a lot. And as I speak to you, I have a wonderful, great mom who just had a baby 3 months ago. Her mom is now in dialysis. She is the breadwinner. She's a single mom because she just got divorced from a marriage that has been pretty abusive. This lady has really spent a whole lot trying to make sure that she secures both her own house, her kids, and their prospect. She did not know what was coming down the pipeline. And what is worse right now is that she has to be the one to take care of her mom. The question is, if this woman is going to be taking care of her mom, the two options she has is take care of your mom or take her to the nursing home. And going to the nursing home is not an option considering where she comes from. Remember, we also have to look at the cultural aspect of this. Some of us from Africa or Asia or some other place outside the United States, we have a culture that we want to preserve. And you don't just go and take care of or put your parents into a nursing home where they have no clue of what is going on. Personally, I was faced with that option, but I know that would even kill me because we have a different culture. Even those of us who are here in the United States, we know how difficult it is to really place your loved one in the nursing home. You know the time consuming that can be. You have to be running around being the advocate for yourself, for your family, for anybody. And nobody, honestly, in this how many years of my nursing career has explained this situation, and you wouldn't believe it. I'm a nurse. I've been working in the hospital. I've worked in the clinics. I have done it all. I did not get that information. So please, this is wonderful. And I don't want to take our time. I want to also open it up to our audience. Please feel free to ask your question. And Paul, please put your information on the chart so people can get connected with you when they need to do that. So please, I'm opening it up. Ask any kind of question. Paul is the expert. He has lived in those both worlds and he understands what healthcare is about right now. Anyone has any questions for Paul? Comments? Yes, Hannah. Hannah,
Yeah,
go ahead.
I'm sorry I came late, but Paul, is this an insurance that you're offering? I came a little late. Is this an insurance?
Yes.
Paul, are you there?
Yes, I am. Sorry. Yeah. Okay. Yes, I am. Yes. Okay. The question is yes. Is it an insurance? Yes. Hannah, there is a way, we call it cash value life insurance. There is a way that you could leverage life insurance to basically as a plan that you could use to protect your wealth. You could use it for when you get sick. So it's not your traditional when I die. That means when you get sick, as you are still alive, you could go there to use the resources from it to take care of yourself, be it medical bills, be it, whatever the case may be. You could use it for things like long-term care, critical care, not just when you die. You can also use it. They call it basically 3-in-1 solution. 3-in-1 solution. So this is kind of what it looks like. If you look at this right now, most people, when they think of insurance, they think of when I die, funeral, concert, will prep. That's what most people think about. Insurance is death insurance when I die. Well, have anybody ever told you that there's a way that you could use insurance as what we call 3-in-1 solution? You could use that to do what we call family bank strategy. Believe it or not, you could use that as what we call living benefits. You can also use that as what we call, ultimately, when people die, then it will take care of you. It's not a new concept, if I'm really being honest. This is not new, but it's just that, especially in the middle class, oftentimes most people don't really know much about it. There is a tax code with IRS that allows any money that goes in here, that way you don't pay taxes on it. But this, in a nutshell, kind of tells you what it does. From a long-term care purposes, how come the money that goes in here, you don't pay taxes on it? When people get sick, you can take that money and you don't pay taxes on it. College planning, believe it or not, if you have little kids, you want to start something for them to go to college, like grandchildren or your own direct children, believe it or not, you can actually use this vehicle for their college plan, right? So again, it's not a new concept, but I'm more than happy to have a one-on-one conversation to really dive right into it. I'm a parent, I have 3 kids, and I can tell you, not just that, we also do things like if there's any retirees, people that are getting ready to retire, maybe you are looking for options. What do I do with my 401k? What do I do with my pension? Who do I talk to? What options do I have? There are also things that we could do for people that are getting ready to retire. Again, we work with a lot of companies that some of you might be familiar with, like Nationwide. We work with them. So a lot of what we do is like understanding what your options are. We will go with that. Nationwide is the A-rated plus, right? So we work with them. We work with companies like not just Nationwide, Transamerica. We work with Global. There's a lot of companies that we work with, but the option is really understanding what your needs are, and then we'll go from there. But yes, to answer your question, is that insurance? Like I tell people all the time, this is how you want to look at it, Hannah. Most people, when they think of insurance, you have the life insurance, but also keep in mind, you have the debts. You have the debt insurance. Debt insurance, by definition, somebody has to die, and then the money will go to the beneficiary. So debt insurance means it does what it's supposed to do. Somebody has to die. That's it, right? So typically that's more of a legacy. But the question then we ask people is, life insurance, you could use it as a long-term care. You could use it as a long-term care. You could use it as a college plan, believe it or not. You could use it as a supplementary retirement. In addition to why? Because it's the only vehicle where you don't have to pay taxes. Any money that goes in here, when you take that money out, you don't have to pay taxes to IRS. You don't have to pay taxes to your states, right? But also, you could use it for when you get sick. But also, you could use it as a pension. Once again, why would you do that? Because you don't have to worry about paying taxes on it, right? I can go on and on and on, because the whole idea is, why would I want to have something that doesn't take care of me when I need it the most, which is when I'm sick? I need money to pay my bills. I need money to pay my all of that when I'm sick. That's where life insurance. So life insurance, by definition, is life. when you are alive. Death insurance by definition is when people die. And on average, typically that's what most people, like when I was working for the hospital in California, I was a registered nurse, I had a death insurance. It wasn't a life insurance. The only way my wife or my kids will get that money, I will have to be dead. If I get diagnosed with cancer, they don't get the money. If I get diagnosed with stroke, they don't get the money. So that's the difference, right? So sometimes people kind of confuse the two. So that's where, again, when we come in, we do a lot of education to get people to understand, okay, what exactly do you have? Do you understand how it works? Have you looked at other options and etc., right? The point is long-term care is a real problem in this country. Long-term care. Because basically the system is, if you make just enough money, you might not qualify for a nursing home, depending on your income. Medicaid, yes, it's for the senior, but Medicaid is not for every senior. It depends on your income. It depends on whether you own a home, you don't own a home, how much disposable income you have and all that. So that's why a lot of these things, sometimes people know about it, sometimes they don't know about it. So a lot of what we're doing is trying to make people become aware, because this is not something you want to do when you are there. That's how people get in trouble, right? So a lot of what we're doing is planning and, making sure that people really understand. Again, a great question, by the way. I'm going to leave my information here, but you could find me, everywhere. This is me and my wife when we were both nurses, not anymore. But this is my information. The best way to reach me is my cell, which is the mobile 530-354-7185. That's the best way to reach me. My email address is also there. That is the best way to reach me. But you could find me on LinkedIn. You could find me on YouTube. Sometimes I have different video that I put out where I talk about some of these things. But other than that, I'm very active on social media, so you can also find me there. But I'm more than happy to have one-on-one conversation. Yeah. If you need that. Mm-hmm.
Thank you so much, Paul, for that explanation. That is awesome, and I'm so thrilled that you found the time to come talk to us. I know a lot of my moms are not able to join us tonight because some of them, this is the time they're putting their kids in bed and trying to find time to do a few things before it's late. But I know that we have a recording, so we will be able to share this. People can watch the record of this podcast and be able to get hold of Paul. And one thing that I think, knowledge is power, they say. And until people understand and get the knowledge of how to build wealth, especially when it comes to life and death insurance, which I have to be honest that I did not know the difference. And I really feel for my moms out there, especially the single moms who don't even, all they care for is how are they going to get by day after day with the kids they have, with the job they have, they juggle work, they juggle life, they juggle family. It is, and that's what causes some of these problems, illnesses we're talking about. So providing this platform where people can come and learn and then share, really, I feel is very important for the mothers out there and for the guys too. Because Paul talked about the college savings, talk about a pension. These are things that he can really unravel with you, and he can really go through that one-on-one with you. Not everybody can actually provide this kind of education, but you want someone who understands it, who has really used it himself. Because Paul has 3 kids with his wife, and they're all into this. This is full-time job that he's doing, and I have really begged him to come share with us. And I'm so privileged, and I think all of us are thankful to him for this wonderful time. Not everybody will tell you this, and not every platform will go to this extent to share this valuable information. So who else has questions for Paul or comments? Please, you can unmute yourself and ask your question.
Yeah, I have a question.
Yeah, go ahead.
This is Dr. Mano. Thank you, Mr. Paul, and thank you, Sister Zita, and thank you for all people present on this podcast. Please, Mr. Paul, thank you for your presentation, such an excellent presentation. I have a couple of questions. One, this business, do they have any way they can help parents who want, who kind of have plans for their kids on how to, establish their kids for their future, whether it's college or something? And then what if somebody wants to help families as you help? How can one get involved with this kind of, business? So it's just, that's all I have for you. Thank you, Mr. Paul.
All right, I'm muted, sorry. The first question was for parents, if they wanted to start something for their kids, right? You want to mention?
Yes.
All right. So, great question. This is basically how I want everybody to look at this. This is how I want you to look at it. If you look at this right now, most people that have kids that they want to save something for college, this is all you got. There's nothing else you could do. It's either you put that money in the bank or you open what most people typically do, 529 plan, or you do what we offer, which is IUL. It's self-explanatory, but if there's anything that I want everybody to pay attention to, financial aid. If you do something with the banks, you will have to disclose that money to the school when they get ready to go to college. You can't lie on the application, right? You gotta be honest with that. That's how people get in trouble. So that might put them in your children in a position where they don't qualify for financial aid. If you do it with a bank, if you do a 529 plan, you're gonna run into the same thing. If you do IUL, well, IUL is a life insurance. It's not illegal to set up a life insurance as a college plan for your kids. It's not illegal. There is no law that says you can do that. It's a college savings, but you're using insurance to do it. But also, another thing that you need to look at is the ability to leverage compound interest in your favor. The ability, how can one leverage insurance to work in your favor? I happen to think that Albert Einstein, the scientist, he's the greatest philosopher, in my opinion, the scientist to ever live. He was a German scientist. He created a lot of things, but he was the one that came up with the idea of compound interest. The ability to leverage interest to work in your favor. Well, this type of account will allow you to do that. Why? Because there's no way for you to go backwards. You don't lose money. But not only that, the interest on average is better than what the banks are offering. Right? If you look at, again, I don't want to go too far, but if you look at what the interest rates and you look at what the inflation is doing today. So inflation is 8.5%. So level setting here, inflation is the buying power of the currency. It's 8.5%. So if the inflation is 8.5%, but then the banks, and I go put money in the bank for my kids to go to college, the bank is giving me 1 or 2%. Well, how am I going to use money that is giving me 1.2%, 1 to 2% to pay for my kids' tuition, where on average is going up by 8.5%? You see the disconnect. It doesn't make sense. It doesn't add up. So the whole idea is, if I'm going to save for my kids to go to college, then I need to be in a vehicle where I can keep up with what inflation is doing, right? I can't be saving money at 1% and then I'm spending at 8%. So I'm making 1% or 2%, but when I spend, it costs me 8%. That doesn't make sense. So this is the way that you could bridge that, because college tuition. So let me give an example. When I graduated from nursing school back in 2009, the school that I went to in California, a semester used to be $3,000. A semester. 2009, that was 12 years ago. A semester, $3,000. Today, the same school, the same college degree, a semester at that school today, 12 years later, is $7,000. So back in 2009, if I had money in the bank that I'm gonna use, and that bank is giving me 1 or 2% for my kids to go to school today, you could see that that money is not gonna be enough to pay their tuition, right? So that's what inflation is doing. That's an example of this. I can get into running numbers to really explain really what actually, let me see. Maybe this can actually make more sense. So if you look at this, if you can see my screen.
Yes.
So this is the practical application of this. This is the practical application. Let's say I have a son that is 4 years old. And by the way, this is Trans-American, in California, son. And the parent says, Paul, show me a way, I want to save. Keep in mind, this is insurance, okay? But you're using insurance as a vehicle to save for your kids to go to college, right? It's a vehicle, it's a means that you are using to do that. But the parent says, Paul, how can I leverage something like this? I just want to put away $250 every month. $250 a month is about $3,000 a year. And I want to do that. I want to be able to set it up to where they could use the money there to go to college. But then after college, I also want to make sure that they have enough money. Let's say they want to buy a house. They want to get into real estate. They want to get into it. Basically, you are setting your children up for life. That's really what you're doing. It's not just for, because most people after college, they still need to continue, right? But let's say I just want to do this until they are 50 years old, they're 4-year-old. Can you show me, Paul, what this thing can do for me? This is the practical application of this. The practical application of this is what it will look like, right? The practical application of this. So let me go back and share my screen. This is what something like this will look like. If you look at something like this right now, saving $3,000 a year, which is about $250 a month. By the time this child will be able to go to college at the age of 18 years old, you would have saved almost $53,000 towards their college. It might not be enough, but it's a start. Right? It's a start. But also, by the time they are 50 years old, you would have put in $138,000, and this child will have well over $624,000 in this account. But on this account, if they want to take this money out, they don't have to pay taxes to California. They don't have to pay taxes to IRS. Any money that goes in here, when you take it out, there is a tax code in IRS called 7702 subsection A. That is a tax code. That tax code allows any money that goes in here, when you take it out, it's tax-free. But who is to say that that tax code is going to be there 5 or 10 years or 20 years from now? But right now it's there. And the money that goes in here too, a lot of people that get creative. If you look at here, you could do a withdrawal, meaning you could withdraw this money, or you could do a loan. What most people do to get around this is they do a loan. They borrow the money. They call it infinite banking. So if you ever hear the word infinite banking, that's what they're talking about. Infinite banking is a way that you could create a life insurance contract, and then you could turn around and start borrowing the money from that life insurance. When you hear the word infinite banking, this is what they're talking about. So most people that are creative, they never withdraw money from this. They do a loan. Because the whole idea is, if I'm gonna borrow money, let's say Transamerica say, we can let you take loan from this for your son to go to college, the 50,000, but then we're gonna charge you 2% interest on the same month loan. Well, on average, if this account is giving me 7%, or this account gave me 2%, now is a wash. I borrow money at 2%, but I'm still getting 2% from the insurance company. Now it's a wash. In other words, it's not costing me anything. So why would I want to go borrow money, student loan from the bank that I'm going to pay them back for the rest of my life when I can create my own account so that my kids could use it? So, but this is the practical application of this, right? This is kind of how this thing works, right? So just like you could do it for the kids to go to college, individuals could do this too to supplement their retirement. Because the whole idea is, well, every other thing that I'm doing, I'm going to pay taxes on it. We are not saying people shouldn't pay taxes, right? We're a great country, so we want people to do that. But the point is, if you have a loophole legally that is saying, well, this is also a way that you could build wealth, why wouldn't you? Right? That's really the point I'm trying to make here. So insurance company have things. So if you want to look this up, this is really, you don't even have to, in case if you're wondering what exactly is this, how come I'm hearing this for the first time? This is really how this works. If you want to look it up, because when I do this, I want to make sure people really understand. So this is really exactly how this thing works. It's nothing new. Like I say, it's just that it's one of those things sometimes most people don't know about, right? So it's nothing new. So all you have to do if you look at this is 7702 subsection A. It tells you everything that I'm saying. How exactly does that work? Because it's not a, it tells you this. This is the code that allows this. If you read up on this, it will tell you everything that I just explained. What is it? How can I put money into something and I don't have to pay taxes on it? It's a tax code. And this tax code was re-satisfied after 1984. So this tax code that allows any money that goes into life insurance contracts, when you take that money, you don't pay taxes on, right? Many people know about it. Many people don't know about it. But this is really what allows everything that I'm explaining to be possible, right? So it's out there. And it's not just to kids. Parents could do it, depending on their age. Of course, it's insurance, depending on how healthy you are. Do you have a pre-existing condition? Do you not have all those things get a play into factor, right? But this allows, so again, is an advantage that some people know about, some people don't know about. So again, that's really, so it's a vehicle, it's a means. And then the other question was, what was the other question again? What was the other question?
The family, I think a parent was.
Yeah, how would somebody, since this is helping families, how would somebody want to join this your business to help families? What would the person do?
Oh, license. Oh yeah, to do what I do, obviously, first of all, we in a business where obviously we're dealing with people's sensitive information. Financial industry is one of the most regulated industry out there. So you gotta have a clean record, so no felony background, right? Because the company will do a background check on you, and the state that you live in will do a background check on you. So if there's anything with fraudulent or anything, it won't work, right? So you get $125, they do a background check. Depending on your state, you will need to be licensed in your state. So you will take a state exam. That exam would allow you to do what we do. Basically, I'm a licensed professional. $30 to study for the exam, depending on the state. Texas, where I live right now, is about $30 to get licensed. California is about $88. Different states have different rules and regulations, but you're probably looking at about $300, and that license allows you to do what we do. And then that's what, when once you're licensed, then we could train you. We could train you to really, you know, do what we do. Yeah. So that's really that. Yeah.
I think there's a question on the chat. Hannah had a question. She said, such an important topic. What about AFLAC? Do you know anything about that?
AFLAC.
Mm-hmm.
Yeah.
Yeah. AFLAC it basically deals with long-term care, right? It kind of deals with long-term care. So the way I try to explain it to people is, wouldn't it make sense to, instead of having multiple plans, wouldn't it make sense to have something that take one plan that basically offers all three solutions, like 3-in-1 solution? Why would I want to just have one plan when I can have supplementary retirement taken care of, living benefits / long-term care taken care of, and then concierge well prep taken care of all in one plan, right? So nothing wrong with doing AFLAC, but again, you're only dealing with one problem instead of dealing with holistically the whole problem. Yeah, but AFLAC is out there. Basically, it's more of a long-term care.
I think it also depends on the information one has. I didn't know about Hannah, but I know that a lot of my clients have no clue of like what you've just explained right now. Not everybody has that, you know, information. So I don't know if Hannah wants to speak to that, but I know that people will just act based on the information they have. So thank you.
I have a question.
Yeah, go ahead.
Hello, good evening, everyone. Paul, thank you so much. My name is Sister Caroline, sorry. Thank you so much, Paul, for this enlightened presentation. Like Zita said, some of us, we are not aware of this. So my question is, first of all, what is the policy figure of your insurance? And also the second question is, what is the premium? Is there any stipulated amount for the premium? And then the last question is, what is the interest rate? Thank you.
Absolutely, great question. You determine the premium, right? You determine the premium, meaning, remember, is a cash value plan. Premium, well, are you trying to use this just as an insurance?
Mm-hmm.
Or are you trying to use it as a way to grow cash? If you're trying to use it as a way to grow cash, then the type of money you put into it, you decide.
Okay.
Right? So it's not so much about how much I want to put in or how much. It really comes down to what are you trying to accomplish?
Okay.
Right? And then to really answer your question on the interest rates, let me share this. So that way, everybody. I know we are streaming, but I have to figure out a way to share this to where I don't really get into I don't get into oversharing, right? I don't get into oversharing, but I want to share this real quick. So I'm actually going to Transamerica website, right? Because I want everybody to see the practical application of what I'm saying. And then it will begin to make sense. So if you look at this right now, it's gonna take a while to upload. I will probably share that. I just, I have my phone number and my, so this is Transamerica website. This is what it will look like. So if you look at this right now, If you look at this, so this is my kid, my son. This is my son plan.
Okay.
So if you look at this account right now, that we started for Owen, I'm gonna try to do it, whatever. That's my wife name, right? So the statement just came last month, April 1 to April 22nd. Right? We started this plan for him 2 years ago. Speaking of premium, that's Owen, right? That's my son. I put in every year 4,500 every year annually. Everybody can see it. So this is my plan for my son towards his college. It's an insurance, but my whole purpose of doing this is I'm setting him up for college. Okay. And I'm gonna do it, right? So this statement just came. Transamerica gave him rate apply 13%.
Okay.
That's what he got from April last year to April this year. They gave him 13%. The most he could get was 13.75, but they gave him 13%.
Okay.
But this interest is not guaranteed. I want to make sure I'm clear on that. It still depends on what the stock market is doing, because this money is still invested in the market. But I cannot lose money. So let's say for the last 2 weeks right now, the Dow Jones and S&P 500, they've been all over the place. Like on average, the market is down 12%.
Okay.
I will not lose money. Worst case scenario, I will go to 0.75%. So I don't even go to zero. But if I'm going to 0.75%, that means people that have money in the market, they're getting wiped out. Right? Okay. So that's really hard. But another thing to keep in mind, the 13% that Owen got last year, if the market crashed this year, he gets to keep it. Compound interest. Okay. Anything you earn the year prior, you keep it. If the market goes down, you still get to keep it. Right? They treat it year by year. When I say compound, that's really what I'm saying. Yeah. Right.
Okay, sorry. The next question that came up from your explanation is, can one have the two options, like have one for cash growth and the other one for insurance, life insurance?
They go hand in hand.
They go hand in hand. So if you have one, you eventually automatically have the other?
Yeah, they go hand in hand, because the cash value it really comes down to how much money are you trying to put in, right? Because the more money you put in, then the more cash value you're gonna have. Okay. But if you do the bare minimum, then it's just a regular insurance. But the only difference is it's permanent. It doesn't expire. So let's say you go get insurance with State Farm, or they will tell you, oh, for 20 years term. Where this type of plan, it doesn't expire. So if you
so it's timeless.
It's time, yes. So the example that I just gave. So if you look at the example that I just gave, this right now, this individual, even they will start paying at age 50. Okay. Right? They will start paying at age 50, and then they will start pulling money out. But you notice what's happening every year. So at 50, they have 624,000. But every year, if they wait to age 60, now they have $1.1 million. If they wait to age 70, now they have $2 million. If they wait to age 80, now they have $3 million. This thing will go, oh my God, look at this. This thing will go to age 121. If they live to be that young, old.
What happens when one die before? What happens to the money?
It depends on when you die. When you die, whatever, depends on when you die. When you die, whatever is left, well, I don't mean that literally, but you know what I mean. Like, no, it depends on when you die.
Yeah. No, I'm just asking, because since it is not death insurance, it is life. So when one dies accidentally or unexpectedly dies, what happens to that money.
Then the money goes to your beneficiary. You have a beneficiary.
Okay,
Mhm.
okay.
It goes to
So
your
it
beneficiary
serves,
tax-free.
it serves both death and life then?
Absolutely. If you get sick, then we'll
Mhm.
file the claim. You start getting the
Okay.
money. If something happens, then it
Mhm.
goes to your beneficiary. When you retire, so let's say
Mhm.
we started up, you like, I only want to do it until age 60, and then at age
Mhm.
60 you stop, and then from age 61, then we will start the income. Then now you will
Okay,
start getting income from it, but on that
great.
income, you don't pay taxes on
Oh, great.
it. Mhm.
Okay, that's good.
Mhm.
That is educational. Thank you so much.
Absolutely. Absolutely.
All right.
Any other questions?
Any other question? I know we have gone 12 minutes above our time, but guess what? This is talking about life and what really helps life. So I don't really mind. But if anyone has another quick question, please feel free to ask Paul while we have him here. Or if you prefer to get in touch with him, now you know how to do that. He has all his information out there. Please feel free to get more one-on-one information with him and share with your family, share with your friends. This is really, like I said, this is wealth care. We do healthcare, we do wealth care. And I always have my moms and their kids in mind whenever I'm thinking and doing whatever I do, because this is my life purpose. And so please take advantage of it and feel free to ask any questions. And if no one has any more questions, we're gonna just wrap it up. And
Zita,
always, yeah.
I just want to thank Paul for an excellent presentation. And this is your sister friend, Doretta.
Yes, yes, Doretta, awesome, my friend. Doretta, Paul, for your information, Doretta is one of our board members in the Zita's Healthy Beginnings. Doretta is my sister from another mother. She is a strong, powerful woman who knows her what. And I can tell you now that she's going to take this information further to her church members, to her family, and to others. So just get ready. You're going to hear back from us. And yeah, thank you so much, Doretta, for your support. And everyone else who have really, attended and spent this time with us. I am so appreciative of your sacrifice, of your support. Always remember that this podcast is brought to you by the World of Ability podcast in collaboration with Transform You Network and PARC. We are always glad for the opportunity they have accorded us to use this platform to reach our audience. And so we continue to ask you to support us in any way possible. Please share our podcast with friends and family, and always support us every Tuesday at 8 p.m. Eastern if you can. And for next week, we will be having Renee. Renee was with us a couple of weeks back. I think it was last week or no, 2 weeks ago. And we had some technical challenges that really didn't go well with her podcast. So she's coming back to talk to us again about finding your voice. And I know that our women out there are really losing their voices by the day, by all the stuff that are being thrown at us. And I know that with God, all things are possible. So let's just come back next week, Tuesday at 8 p.m. Eastern, and learn from Renee on how to get the life skills to support ourselves and to support our families. And if anyone else has any question, please ask. Otherwise, we're going to wrap it up.
Zita?
Yes.
Yeah, hi, it's Hannah.
Yes, Hannah.
Just one question. Paul, it's all about cash value of your policy, right? in your policy?
Paul?
Is Paul, is he still here? Oh,
Yeah, he's muted. Paul, can you unmute and answer the question, please?
Yeah. Sorry.
Yeah,
Yeah. Well,
yeah. Hi, Paul. Now,
Hi.
it depends, no, there are different policies. There's whole life, there's universal life. And because I have policies. I have long-term care, which
Mhm.
I've had for like 23 years.
Mhm.
And then I have another policy that has a cash value.
Mhm.
But I'm using the cash value to pay the premiums.
Yeah.
So you could use cash value for many different things.
Yes, Hannah. Yes. What happens is sometimes if you've had this for a while and you've built up enough cash value, but that cash value there is there for two things. You could go there, take that money, do whatever you want to do, or you could leave that money there and then allow that money to self-fund the policy. Yes, you could do that.
Right. But like I have a long-term care policy. That's not a great policy, right? Because it goes up every 3 years, not long-term care. I mean, term insurance, term insurance.
This is all personal preference. Why do I say that? If you look at this is how I look at it. Term, can I be 20 years old and go get a term life insurance for $20 a month? Can I do that? Absolutely. But then after 20 years, if nothing happens to me, now I'm 40. So that means I'm older. Then now that $20 a month for the same plan now is probably going to cost me $100 if there is no pre-existing condition. And then I do it for another 20 years. Now I'm 60. Now I'm much more older. Now it might cost me $300 to $500 to get the same plan.
Yeah.
So the point is, the only way, again, I'm not trying to be funny, but the only way it really benefits you is somebody has to die. If nobody dies, then just keep renewing and keep paying and keep paying. So it's almost like, I hope that I don't die, but then if I die, that's the only way somebody's gonna get something out of this. Right? Or you get older and then you're in a point where you can no longer afford it. Then now that's how you get a lot of seniors. So most people that had insurance, but now they are older, they can no longer afford it. So they don't have anything. So you get a lot of that situation going on. So does it make sense when you are younger to lock yourself in and then it's permanent? You don't have to worry about it anymore. Yeah, so, but go ahead.
But I have long-term care insurance. When I start using it, do I have to pay taxes on it?
It would depend on the type of long-term care you have and which company and all of that. So I don't really have I don't have enough information to really give opinion on that. It will depend on it. You shouldn't, but I've also seen some long-term care where they say you have to. So it will really depends on the specifics.
I think what I'm gonna suggest, Hannah, just for the sake of time, book an appointment with Paul. Talk to Paul about what you have, and I'm sure Paul will definitely point you to the right direction, because you might really get a whole lot out of it, one-on-one, better than here in the forum. What do you think about it?
Perfect. I will book an appointment.
Yeah.
Thank you. Thank you.
Thank you too. So Paul, thank you so much for this wonderful opportunity that you've really given us your time. And I am so excited that we are all, well informed or better informed about this whole policy. And I'm sure we're gonna all agree that this is very informative and something that we can use for ourselves and for our families. So I'm gonna invite you back sometime in the future to come, continue from where you start, because you can learn everything at the same, the same day. It took hours for you, I'm sure, to learn this. You're gonna actually unpack it, but little by little to our audience. So, but thank you for your time, and thank you for everybody that has really stayed with us. And you all have a wonderful evening, and see you next week at the same time and same place. God bless you. Have a good night. Bye-bye.
Thank you.
Good night. Good night.
Bye.
Good night. God bless.
Good
Good night.
night.
God bless y'all.
Thank you. Bye. Good night.
Bye.
Bye.